Hey guys, Jessica here. Today I'm finally going to be opening up a Fundrise account, and I'm going to be doing something a little bit differently today. I'm actually going to be filming this as I'm going through this process live, so you get the opportunity to see my real thoughts as I'm going through this process. So before we get started, a little bit about what Fundrise is. So Fundrise is basically a real estate investment company that goes out and buys a bunch of residential and commercial real estate properties. Then they turn around and they allow investors to come and invest in either a portfolio of those properties or even specific real estate properties within their portfolio. Basically, they allow people to get exposure to real estate without the pain of having to go and evaluate and buy physical properties themselves. Obviously, this is not a totally new idea. There have been real estate investment vehicles forever, things called REITs, real estate investment trusts. And REITs are basically similar to mutual funds where they pull together a lot of real estate into a portfolio and then they pay out returns to investors. For example, Vanguard has an ETF of a bunch of REITs. The ticker is VNQ, the Vanguard Real Estate ETF, and like other Vanguard ETFs, it has low fees and is super convenient. So the story behind why I'm finally opening up a Fundrise account. For the longest time, I didn't want to open up an account. And the reason has nothing to do with Fundrise and a lot more to do with the fact that I wanted to put REITs in tax advantage accounts like IRAs, HSAs, 401ks. The reason is because REITs are pretty unique investments that throw off a lot of ordinary income. What that means. So normally, say you have a mutual fund, it pays you dividends pretty regularly, and dividends are normally taxed at capital gains rates, which for most people at the federal level is about 15% or so. REITs, on the other hand, the vast majority of the dividends that REITs pay out are taxed at ordinary income rates. And ordinary income tax rates are a lot higher. Again, it depends on the tax bracket that you're in, but for most people, significantly higher than the capital gains tax rate. On top of that, REITs are actually legally obligated to pay out a lot of dividends. Therefore, you have this vehicle throwing off a lot of cash, increasing the taxes you pay. And for people in their 20s and 30s, this is not a good idea. People in their 20s and 30s are in the situation where you should be investing for the long term. You're working hard, you're building up your investments, and you're increasing your wealth. You're not trying to live off cash like a retiree. So long story short, putting REITs into normal investment accounts doesn't make a lot of sense for younger people. You don't need the cash and you don't want to be paying higher taxes because of it. That said, REITs in tax advantage accounts do make sense. You're not paying day-to-day taxes in these accounts, and in addition, them throwing off a ton of cash isn't a big deal because they can just be reinvested and allow your investments to keep compounding over time. Anyway, so last year I had been taking a look at Fundrise and was really happy to see that actually they did have an IRA offering, but the biggest thing was that they had really high fees, $125 annually on top of their normal management fees, which was a big turnoff for me immediately, and that was the end of that story. Then, this morning, I got an email from Fundrise saying that they're waiving the fees on the IRA for at least a year when you invest $3,000 or more. So here I am, they got me. I'm going to be giving them a try for at least a year and we'll see how it goes. So a few things I'm going to be evaluating as I'm going through this. One, their fees. Two, what makes them special, what makes them different than a VNQ, for example. Three, their performance. Four, their liquidity, how easy is it to sell and get cash if I wanted it. And five, their user experience. And so I'm just going to jump right into it. So first thing I'm going to be looking at is fees. So I'm on their website here. All right, so here it says investors pay a 0.15% annual investment advisory fee, and then down here they talk about a 0.85% annual asset management fee. In total, that works out to be 1% a year, which is decently high. But that leads us into the second point, which is how are they different? And I know that one of the biggest things that they talked about, at least when I was reading about them before, is that a big component about why they're different is in their fees. So going into that. Okay, so here is where they're talking about why they're different, specifically with respect to their fees. Taking a look at this. So I think the biggest thing that they're talking about here is that There are a lot of hidden fees with respect to investing in REITs, whereas for Fundrise, all of the fees are very clearly disclosed. It's 1%, you know it's 1%, but with REITs, you kind of see a small number published, but then there's a lot going on at the fund level that you don't actually even see. Okay, so if that's the case, what I would want to be seeing is that their returns are consistently higher than the REITs. And the reason for this is because there's a structural difference between what they're doing. It's not just that they're, say, necessarily picking better real estate, but that there's a structural difference between what they're offering and what you can get just buying a normal REIT out there. Okay, so that takes us nicely to the third point, which is, well, how about their performance? And so one place that I've been looking, back when I was looking at Fundrise about a year ago, is this great blog, My Money blog. They had been regularly updating their performance of their investment in Fundrise versus their investment in VNQ since I think they started back in 2017. So let's take a look. 3 years in, are they actually seeing the kind of improved returns from Fundrise versus VNQ? So scrolling down, so since October 2017, he put in $1,000 into Fundrise and another $1,000 into Vanguard's ETF, and it was looking pretty close for some time. So Vanguard is this red line, and Fundrise is this blue line. Great. All right, so all of this checks out on performance. Let's take a look at liquidity. And so liquidity is basically how easy is it to get my money out of Fundrise versus get my money out of, say, the Vanguard ETF. And I know that the Vanguard ETF is actually really, really easy because you just go to your brokerage and you hit sell, and it's very straightforward. You could sell it at any time. Fundrise, I don't think it's the same way, so let's take a look at that. Okay, so taking a look at the FAQs with respect to closing out accounts, they really don't make it easy to figure it out. To withdraw the money, it sounds like the steps are, first you have to request to redeem your shares, and possibly they're subject to a penalty. Then digging further. Okay, so here it says that redemption requests submitted will be reviewed at the end of the calendar quarter. So it sounds like from a liquidity perspective, it's not, I'm going to sell it and I'm going to get my money this minute. You're going to have to wait until the end of the quarter and 4 times over the course of the year. So not super liquid. And then on top of that, there are also costs associated. So you're allowed to pull your money out within the 90-day introductory period with no fees. But then it sounds like after the initial 90 days, you're going to be on the hook to stay with them for at least 5 years to avoid any fees. So if you have been with them for 90 days to 3 years, they're going to charge a penalty of 3%. That goes down to 2% if you've been there for 3 to 4 years, 1% for 4 to 5 years, then after 5 years, no penalty. This isn't great. My expectation is that a lot of this has to do with the fact that, at least they say, a lot of the returns come from long-term investing, and so they're trying to incentivize people to invest for the long term. In any case, it looks like the liquidity is not that great, but real estate is a long-term investment, and if necessary, if I really don't like it, I want to pull my money out, at least I can get my money out at least once a quarter. I'll just have to pay a bit of a penalty. Okay, the last thing I'm going to do is I'm going to evaluate their user experience, and the best way to do that is to open an account. Okay, so on this one I'm going to go with the basic, so let's start with that. Okay, I'm a little bit confused here because I'm looking to open up an IRA, but nothing I've seen here yet talks about IRAs. Again, I feel like I'm pretty far down this process and I have still not seen anything about an IRA. Alright, so I just connected a savings account and it seems like there's an error because they're telling me that I have to fund it from a checking account. This is not great because it means that I'm going to have to transfer money from my savings account to my checking account. I don't normally keep a bunch of cash in my checking account, so I'm going to go and do that first. Okay, I'm back, so now there's enough money in my checking account, so now I'm going to link that account too. Okay, so I'm at the end of the process. They're telling me that This is all of the confirmation of the information. However, again, there's nothing in here about an IRA, so now I'm very concerned and I'm going to need to go back to figure out how do I get my money into an IRA. Okay, so I went back to the Fundrise IRA website. I'm just going to give this a go again and hit the link here. All right, so this process already looks way different than what I was going through before. I have no idea why this happened, but I guess I'll keep going with it. Okay, so I'm going to put in $3,000. All right, select your investment plan. Well, I think since this is my retirement plan, I'm going to go for long-term growth. Okay, so taking a look at the fees, I love that the promotion is already in here. It says that the fee is going to be waived at least for 1 year, so let's keep going. You'll need to invest an additional $3,000 or more each year to continue to qualify for this fee waiver. Dividend reinvestment, the fact that it's in the onboarding flow, this is great. That means I don't have to hunt around in settings for this. I would like to have it turned on. Okay, seems like it's done. I'm going to go back to the transactions page. And I put in a $3,000 investment into long-term growth. I guess that's it. And we will see how it performs. In general, I guess it was pretty straightforward. Like, I'm a big fan of the user interface that Fundrise has, and the onboarding flow was decently straightforward, except for the fact that, as you guys saw, I went down the wrong path for like a long time before I somehow went back to the onboarding page and then found my place to the right onboarding flow. Not really sure what happened there, but that's actually a pretty bad experience. If I had, for example, continued down the wrong path, funded the account, then probably would have needed multiple hours on the phone or email with support to try to get it to the right place. But now that the account is opened, that's it. It was pretty straightforward. We looked into the fees, which is at the nominal level seems like pretty high at 1%, but they said the reason it's so high is because there are a lot of hidden fees in normal REITs and in the ETFs. So I can buy that. We'll see if that plays out actually in the returns over time. We should be clearly seeing that there's an improvement in returns because of the fact that I'm paying lower fees. And so I hope that was helpful. If you want us to help with walking through this process, we'd be happy to help. You can sign up on our website. It's linked in the description below. We do it completely for free. We're a startup on a mission to take the tax and financial optimization strategies of the rich and make it completely free. Other than that, if you got value out of this video, please hit the like button and subscribe for more optimizations. Thanks.